Say data shows that the rate at which prices have changed slowed marginally to 6.2% in April from 6.3% in March. Food and transport remains the biggest drivers pushing inflation. At 6.2%, inflation remains outside the top end of the Reserve Bank's target band.
It's expected the slowdown in inflation will be short-lived. High inflation will likely be a reality for the foreseeable future. When inflation is high, consumers are getting less for their rents. Driving price increases is the drought, rendering food more expensive. The weak rand means imported goods are pricey too. And with the oil price going up, it means it becomes expensive for us with our rents. This means petrol prices will go up and delivering goods to different places will be more costly too. The high inflation and the weak economic growth will translate to more pressure on the households.
I think it's a combination of the effect of the drought, given short supplies of especially vegetables and fruit that have rocketed up again in the month of April, and also the rand exchange rate weakening, as we've got some of the commodities priced in dollars. So the impact of the recent weakness in the rand exchange rate has also had an impact on the food prices.
It is expected that inflation will hit 8% by the end of the year, putting the Reserve Bank in a difficult position of finding balance between the high inflation and the weak economic growth rate.
The impact on interest rates is indeed also a difficult scenario. On the one hand, we have already seen the bank increasing rates by 100 basis points over the past 3 MPC meetings. Already a lot of restraint into the economy. We are seeing economic growth basically at zero. We actually think we might see a negative growth rate in the first quarter. And we've got the job losses, as you know, in quarter one, more than 350,000 job losses. So the economy is bleeding. And in that respect, we hope that the bank will consider that and maybe pause at this current meeting and not change interest rates again. Having said that, if you look at the inflation profile going forward, there could be pressure on them to increase rates further.
The decision by Moody's not to downgrade South Africa and the reduced likelihood of a tighter U.S. monetary policy, the slowdown in inflation in the past 2 months, and the recent poor economic data will likely lead to the Reserve Bank leaving interest rates unchanged this week. Gloria Sefako Musi, SABC News, Johannesburg.